Hi, everybody. Eddie here. Just going to do a quick market update for next week. So it's still staying a little bit volatility in the markets, volatile in the markets, and we're heading into a resistance area, which is the 50-day moving average. Also, you can see this is in the down channel. This is the SPX S&P 500. So on top of this channel right here, if it actually hits and gets rejected, well, most likely we won't get our next leg down and come back test the 50% area right down here. This is the pre-COVID highs. You can see right over here, this is the pre-COVID highs. So this is most likely the area of support, and that's the area that I would most likely start looking for positions for the longer term. All right. So if we actually break through it, there is a gap to be filled right here. And then we head into this major resistance zone right up here. So if we actually break up and test this zone, most likely we get rejected the first time, and then we'll come back, retest, and then go higher. So that would be a trend change when that happens, right? So if that is the case, higher high, higher low, it's a trend change. Start getting into some positions. I would go in and start off with 1/3, see how it reacts with the market. And then as it goes past the 200-day moving average, that's where you want to start adding back in and considering a half position and maybe a full position along the way. Right. But so far, we're still in a downtrend. We're still in a bear market. And it's looking like it's trying to find a base. It's getting close to a bottom, I would think. Right down here is where I'm looking at the pre-COVID lows. So if it does get rejected, this is most likely the bottom down here. Usually the market bottoms during midterm years in the third quarter. And the third quarter just started. So within the next 3 months, we should be able to see a bottom forming before the run up towards the end of the year with the election, right? So that is something I am looking forward to. I mean, things could change, so don't expect it'll happen 100%. You know, I usually trade with price action, so I make a projection, and then if it doesn't go that way, I change pretty quick, right? And then I just trade price action until it's set up again for another run. Right. So that's how I am reacting right now. I'm still very heavy just day trading. I don't really have a swing position or long-term positions other than Neo, which I have a very heavy position on that I bought at 15. It rallied all the way back up to now 20, around that 20 zone, right? So we'll see. There's a lot of growth stocks that looks like it wants to bottom, but the market's not quite ready yet. So we're looking for confirmation of a trend change and a confirmation of a bottom being put in. So far, it's not there yet. I think there's probably still one more leg down before that happens. So I start positions right now if it pulls back. So if you start pulling back towards the low right here, or maybe I'll sell some puts to grab some shares at a lower price, right? And then it will be a smaller position where I can layer into it and average in for the longer term. And then if it bottoms, then that's where I'm going to start adding on to it and ride the way up for the next bull cycle, right? Okay, let's take a look at the Qs. Qs are down a little bit more than the S&P 500. S&P 500 to date, I think it was down as far as 25%. Yeah, about 24.5% was their lows. So that's considered bear market, right? The Qs are down much more. I think it's around 35%. So let's measure that. Yeah, so 34%, a little bit over 34%. So that's quite a bit down from the highs. And usually the tech market is a little bit more volatile than S&P 500. And I do see another leg down if we break the low right here. If it breaks this low at 269, most likely we'll come down to around this 240 zone, right? And at 240 is where I'm looking to buy a lot more of the indexes, right? Right now I have some puts that I sold a little bit along the way, and then I'll take some positions if they get a sign, and then once they start finding the bottom, I'll add to it by selling more puts. Right. There's a lot of strategies. You can use options to get into positions for a lower price. And if it doesn't come down, I just collect the premium and I pocket the profits, and then then I'll buy shares on the way back up. Right. It doesn't matter. Right. So right now, since I'm heavy cash, I can sell puts. I could take advantage of the price action and make some cash flow while I wait for the market to bottom. Right. So the Qs, I am looking for this area right here, 315.55. If that breaks, that's a good sign. And then we're hoping for it to rally up to around that 350 if that breaks, right? Rally up to 350, get rejected around the 200 for the first time, and then you'll chop around before you'll start going back up into bull territory. Right now, we're much still in bear territory. This is a bear market on the Qs. But yeah, so right over here, I'm looking at 240 as the potential bottom. But so far it's looking decent for a potential change right here as well. So let's see what happens next week. We break above the 50. We're gonna test this high right here, and then this is the key area to look for the break. And if we get rejected right here, then so it might come back down or retest the 50 and then go higher. So just pay close attention to this level. If you are going to want to pocket off that trade, I would start taking profits around right here until it breaks above. Then you just add it back on, right? If you're going to trade in tech names. So if I look at the indicators, the MACD is making a higher low, and also as the momentum. So it's getting close, right? It's getting close to a potential bottom and then a reversal. So just pay close attention to the action, and then trade off the action. Try not to predict and stick to and bag hold, right? Usually, if I am trading, I think it's going to go up it, but it doesn't, and it reverses, I get out really quick. I don't wait around. I cut my losses, wait for the next opportunity, and then I go back in for another ride, right? The people that don't know how to do that are the ones that are bag holding right now, right? Taking a small loss is just part of trading, so you got to learn how to do that when it doesn't go in your direction. IWM, so IWM went down a lot more than the other two. IWM is the small caps. It did came down to the pre-COVID highs, and we went through it, but it looks like it's trying to hold this area right here. So if it does hold, and then we break above this channel and above this area right here, then potentially we're going to get that reversal. We're going to go up and test that 200, 210 zone, and then maybe go back up to this consolidation range right here. But this is going to be a very hard break if it does move back up here. So that most likely would be the target. Anything above that's going to be a hard sell. So there's a lot, you can see at the volume shelf here, there's a lot of people that want their money back around up here because it's consolidated for over a year and then it broke down, right? So if it does come up here, all these people that bought up here and bag holding, they're looking to get their money back. So there'll be a lot of selling pressure up here. All right. Let's take a look at some of the FANG names. The FANG names are what keeps the market up or down. So just going to take a look at what the strength's like for that. So Apple's actually not that bad. Apple's been staying fairly strong in this whole bear market. So that tells you something, right? It tells you that a lot of the money is invested in this stock right here. So it is still down about 30% from the highs, which is still quite a bit. But compare it to the NASDAQ itself, it's still less than the NASDAQ, than the index itself. That means there's a lot of strength in this name right here. And it did just break above the 50-day moving average. 200 is right over here. You're looking at about 151 as a key area to break. And if you can see, if it does come down, you're looking around that 100 to 120 zone as a major support area. And this will be the area where I will be buying a lot of Apple if it does come down, right? Because this is if you look at the volume shelf, a lot of the people that bought down around this area, so they will potentially, that would be the area that has a lot of demand to buy, and that would be the area that you really want to see hold. Because if that does not hold, it's coming down to $80. About $80, I'll be backing up the truck at 80. So, right here is where I would start my first position. And then if that breaks down, I'll hedge it and then I'll buy more at around 80, right? Let's take a look at AMD. AMD, so the chip names, they are very volatile, and they have a pretty large correction off the highs. So it's down about 56% off the highs, right? Right now it's right back into the buy zone. This is the around $70 is the buy zone. As you can see, we actually bounced off that now. We're trading around 80. So this is a must hold area. If it doesn't hold, this area is coming all the way back down to 50. So they do have earnings coming up. Most likely, they're going to have good earnings, and potentially we see a little pop in the stock. But it's the bottom is not in yet. It's still in a very strong downtrend. Most likely you'll have like a dead cat bounce into the upper channel, maybe around that $90 zone, and then chop around before going back up to test this area right here. This is key area to break right around that 110 area. If you can break about 110 and then up to 125, 130, then most likely we're going to get new highs. But until then, we're looking at short term. So short term, we're looking at about $90 to $90 to $100. All right. And we are near the oversold area on the RSI, and MACD does look like it wants to cross for a higher low as well. So there is a bit of a divergence from the stock price and the MACD, which is a good sign because that usually signals a potential bottom, right? Amazon's been trying to base. We're at pre-COVID highs right here. As you can see, it's holding that pre-COVID high very strongly. It's been tested multiple times. It got and bounced off that. So 1, 2, 3, 4 times in any bounce. So potentially this is the bottom. If it does break down though, watch out. It's going to come down to $80. At which point I'll be buying a lot of, because Amazon is still a very good company. It's not even about the retail; it's more about the AWS, which is their cloud service industry, is the best in class. So, and it's a high margin, high growth area. So that is the business that I have a lot of interest in, and if it holds right here, we're gonna most likely test right here at 130 because that's where the gap is, and it's been rejected once already. So we're gonna probably test it one more time, and then maybe we get rejected, we come back, retest, and then go breakout, right? But so far, I'm only aiming for about 130. So if you want to take a trade, you can actually make one right here. You could do credit spreads, you would sell some puts if you want, or you could just go in with some shares and just set a stop below the moving averages. Right, for trade. Meta, Facebook, or whatever, skip this stock. It's a bad business to be in at the moment, and they're in a very tough spot to be in. So I would not touch this stock at all, even though it's looking super cheap on the books. If they don't find a way to get around those ad blocks from Apple, and I think Google and Samsung might be able to allow you to block the ads as well. So if that's the case, then they're going to lose a lot of business, right? And their metaverse thing is not quite ready yet, and it's going to be a long way before that will launch. So it's going to be a cash burn for a long time. Google, one of my favorites. So Google is basing right here as well. This is a support area right around here at that 2000 zone. There's a gap that needs to be filled if it breaks. So if it breaks, it's going to feel like I've most likely test pre-COVID lows at 1500 if it breaks down. But so far, it's looking good. It's holding quite well around this area, and it's testing the highs once again. So if we break above, this is a key at 2500. If we break above 25, we can most likely try the highs again, right? There's a 200-day moving average right here around 2600. So this is a resistance zone right around this area. So and they do have earnings coming up, so you are highly dependent on how the earnings will go. And once they do their split, it's more viable, so you can trade the shares a lot easier, and you can do option trades on it a lot easier. This is one of the names that I like to play a lot of for day trading before as well. So But we'll see what happens right over here. Actually, I'm going to set alert for next week to see where I should break above 2400. Let's just set a little bit above 2403, right? So if it breaks above, then I know that it's most likely going to try like this area right here. I'm going to set actually another alert right on the horizon, the line, which is the bottom of this consolidation. So if you actually break through that, then I know the potential is going to come up to test at 200 and a potential short day trade, right? Yeah, it is in a squeeze too. It's and the MACD is about to go to the zero line, so there potentially is a small pop before retest and then go test the 200 day movement average. So, and Google is showing much more strength than the other ones that we just talked about, other than Apple, right? So Microsoft, same thing. Microsoft, it's in this little downturn wedge. If you look at the long-term chart, it's just normal size consolidation, right? I am looking around this area right here, about 225, possibly 200, which is the 200-day moving average on that. If we do get like a one more big sell-off, that's where it's going to go, and that's where I'm going to buy. If it comes down to this area right here, I'm going to buy some leap options for longer term, maybe 2024 leap options, and profit on and probably get a nice double or triple on the leap options once you start moving back up. So, you know, these opportunities don't come often, so know what to do, right? So have it on a watch list, set some alerts to see if their setups are actually working, and then potentially once it bottoms, that there's an opportunity to get in for an aggressive position, but size it properly, right? And then see how it goes from there. Netflix, I don't really watch this stock anymore ever since it started breaking down, right? Like that's a great short. I wish I short. I did short it. I didn't hang on it long enough, right? So I thought this was going to be the bottom and then another leg down, right? So Netflix is a very tough business. There's a lot of competition out there, and they operate in the red. So you know it's and they need to spend a lot of money to make money. So you know it's not really a type of business that I would want to be in or like to stay with. So it is trying to base right here. So there will be a big move coming pretty soon. If he breaks up, most likely test the gap right here, which is at 270, right? If he breaks down, you're looking about $70, $80 around there. That's a big haircut from where it's trading at right now. So you know, be very careful if you want to trade it. Set a stop below 160, 163, below 163. Set actually 160. That's about $20 on the stop. So to swing trade that, it's going to be a little bit hard. Right, they do have earnings coming up. Every single time I have earnings, it tanks. Look at this, earnings tank. Right, so you know, be very careful buying Netflix thinking it's cheap. You can get a lot cheaper. Nvidia, very much like AMD, you know, big haircut off the highs. It's still a very good company, still very high growth. It was overvalued. Obviously, it was super expensive. It's coming down to this consolidation area, which is a very, very big support zone. So the bottom's almost in for this stock. If you want to start grabbing some shares, this is the time to do it. Sell some puts around that 135, 130 zone. Grab some shares cheap. If you do, if you don't, at least get some premium, right? Pocket some of that premium, take advantage of it, right? So if it does potentially hold this area, you want to see it start getting flattened out. Watch like the moving averages get stacked and then potentially a breakout from there. Volume is really important, so you want to pay attention to the volume to see if there's a lot of buyers start coming in at certain prices, and then potentially catch the big wave up. Tesla, so Tesla, I saw some puts in around that 650 zone a few weeks ago, and I got assigned the shares. And you know, I'm actually up $100 on that now. It's at trading at 750. So It is trying to base right here. This is a nice base. It is trading above 50 and 21 now. Earnings is coming up. I think they're looking for delivery numbers in their bottom line. So if it's good, most likely we'll break above this zone right here. Break above, test at 200. $900 will be my target. So, short-term target. So if you hit 900, take your profits. Take your profits. Wait till it breaks above the 200-day moving average before consider going back in. Right. If it's bad, if it breaks down 625, most likely going to hit that 550, 560 zone. And that'll be an area that you can start buying as well for longer term, right? Because that's a key support area right here. So you want to pay very close attention. I'm going to set my alert on that actually. Pay very close attention to see if it actually drops down to this area. If it does, you can start a small position and then see if it holds. If it does, most likely you're going to consolidate and then break out, right? Tesla always go for big runs, big consolidation, and then breakout, right? So you can see we have a run, consolidation, breakout, run, consolidation, breakout. Now we're consolidation. This is a big consolidation. So if it holds, we're going to be a big breakout, right? So pay close attention. This is one of those companies that you're either going to make it big or you're going to lose big, right? Because it's very volatile, and you have to really believe in Elon to be able to do the job to profit off that, right? So, key levels. This consolidation range around that. Let's call it $800, and then you have up here around 900 and 950, right? So these are two key zones. So if it breaks 800, it's going to most likely hit 9. That would be your first target. You want to take some profits, and then if it hits 950, take it off and see if it breaks above 1,000, right? If it breaks above 1,000, we can go test the highs again, right? If it doesn't, hard rejection, coming back down, do some retest before going higher. So anyway, I'll stop here. Let's have a look at NEO. So NEO, this is the one stock I'm super heavy on, and when it came down to about $15, I really backed up a trap. I literally tripled my position around 15, and then I caught the wave up, and I unload half of it now, and so I still have a very very good size position. And this looks to me like a inverse head and shoulder bottom formation, where around the 200 is consolidating. You see how I set my alert right here? If it breaks around right here, breaks to 50, the momentum is done. You want to get out or hedge it. I normally just hedge it because I'm keeping this stock for a very long time till it reaches back up to around 45, 50, maybe 60. And then I'll keep some potentially going up to $100, right? So this could be one of those stocks like Tesla in the early days where you can make a shitload of money. Excuse my language. You can make a crap load of money on this stock and potentially have like a tenfold type of play, right? But right now it's around the 20s. It's anything below 20 it's a really good buy. Anything below 25 still buyable. And if it breaks above this 2750 zone, it's going to go. It's going to go first 35, most likely hit 35 retest, and then go test the 45 zone. And these stocks, when they move really, really fast, right? So like right here, it did like a V shape up into this 42, and then it just went to 55 in literally 2 weeks, right? Or same right here, right? Break, consolidate, break, and then it just ran like hell. So don't miss out on these type of moves down the bottom range. This is where you can take risks at the bottom range, right? When it gets up to the upper range, you want to be more careful. But on the bottom range, I take this trade all the time. I got a ton of leaps on this for 2024. Potentially 3 or 4 baggers on those. So keep a close eye on it and see how it goes. Right. Maybe we'll take a look at some growth names. Roblox. Nice bottom formation right here. You can see it got stacked and it broke, and you see the volume coming through, right? So there are some life out there on these high growth names. Like this name's got tanked. It was such a big name when it first IPO'd, and now it came all the way down. That's usually what happens with growth stocks. Once they start breaking down, they go down far, right? That's why you get out of them really, really quick. Have to close your eyes, take that loss, and then buy back when the base is in, right? So if you did that like around right here when that broke down and gap down and broke to 50 right around here, around that $100, if you got out right there, you can buy 3 times more stock at this area where potentially you'll run up and hit this gap zone at 58.60 area. So there's some room to run from here. It could go up to 52 to 60 if it really goes. So keep a close eye. The volume's been really good on that. So there are some people loading up on this stock, right? Just get to look what potentially for Chinese EVs. Li Auto, very surprising. They're the best performing Chinese EV. It just went straight up from 18 to 40. Right? You know why? Because nobody's shorting this stock. Probably because Kathy Lee didn't, Kathy from ARC didn't buy this stock. That's why it went up, because Kathy bought XPEV and bought NEO. So a lot of people are shorting them. So sometimes that's all it takes for stocks to not move is the wrong portfolio manager holding your stock, and you become a target for everybody else, right? So Li Auto, it's been performing really well. I should have got some exposure on this, but the only two I have exposure on is NEO, and I got very little bit of XPEV as well. I've been wheeling since last year from like $20-$30 zone. So I just the IV is so high on that I can make quite a bit of premium just selling further dated options off that on the straddles and just trade it back and forth. So that's one of the things I like to do with these high volatile names I want to hold for long term too. I just like to collect premium while I'm holding and just sell puts and cover calls on those at the money. So just collect the premium. So yeah. Anyways, I'll leave it off here. Make sure you like, subscribe, so it helps with the algorithms and help me grow this channel so I could do more of these updates and maybe some free lessons as well if I could get a lot of subscribers. Anyway, I'm out. Talk to you guys later.